Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So, the student loan forgiveness program has ended. Interest started in September, massive amounts of payments to the education department. August, 0.6% month over month inflation. That is the highest month over month inflation we've had in some time. Let's take a look at perhaps what we might expect over the next several months. And finally, seen some rebound in energy and some of the laggards so far during the past couple months. The story of 2023 from a technical perspective continues to be the narrowness of the stock market rally. So the Department of Education's COVID-19 student loan forbearance program has come to an end. As of September 1st, interest resumes for all student loans, and people's first payments will be due at the beginning of October. But there must have been a lot of employees that were waiting for this time period and wanted to avoid that interest that started in September 1st, because we saw on September 1st, $3.6 billion over the first 5 days, if you will, surge into the education department cash collection. So massive amounts of cash flooding in. Now, August report, month over month consumer price index, right? The narrative out of the Fed has been higher for longer. This is one of the reasons why. Strong labor market is the other one. While CPI has rolled over, it's at 3.7% year over year. There is a slight uptick during the month of August at 0.6%. That's the highest in quite some time. We don't expect that to last, but take a look at these scenarios on this chart, moving from flat all the way up to that 0.6% that we just experienced, what that would do to inflation going all the way out to the summer of next year. And you can see that most of the scenarios, absent inflation going flat to 0.1%, puts us and keeps us above the Fed's long-term target of 2%. And one of the big reasons why this higher rates for longer narrative has remained in place. We're going to have to see inflation come down significantly. We're going to have to see some additional cracks in the labor market for the Fed to start considering moving rates lower. Now, the story outside of the interest rate and the direction of what the Fed will do in the future has been the big narrative of 2023 from a momentum perspective. The leadership of growth and information technology, especially on the large cap end, has been the real story of 2023. As of the end of August, the top 10 market cap weighted stocks in the S&P 500, so the 10 largest companies in the S&P 500, are accounting for 76% of that index's year-to-date gains. That's as of the end of August. The story here, large cap tech, those big tech names, top 10, not all tech, but mostly tech, has led and continues to be responsible for the majority of the rally. That's second only to 2007 if you go back in history. And finally, lightning struck twice here recently for animal enthusiasts. If you look over in Africa, the first ever spotless giraffe was found in the wild. That's quite fascinating. But what's even more fascinating is about a month ago in a zoo in Tennessee, a spotless giraffe was born in what at that time was known as the first ever spotless giraffe spotted, no pun intended, in history. And 1 month later, they find one out in the wild. So I don't know if this is a trend or what's going on, but we have two known spotless giraffes out there, one in the wild, one in the zoo. Stay tuned to see if this trend is going to continue. With that, I want to thank everyone for watching, and I will see you next time.